I'm a guy in my basement drinking a little coffee, sometimes smoking a little hashisha, and today, Goldman's Apple Card business has a surprising subprime problem. Goldman's loss rate on credit card loans is the worst among big U.S. card issuers and well above subprime lenders at 2.93%, according to September 6 note from JP Morgan. Holy shit, that's pretty wild. Almost 3% of people are write-offs for the Apple Card. I would figure the Apple Card would be a pretty good card. People that have an iPhone probably pay their bills. Maybe a lot of people are overextended trying to buy a brand new iPhone instead of paying their bills. More than a quarter of Goldman's card loans have gone to customers with FICO scores below 660, according to a company filing. That could expose the bank to higher losses if the economy experiences a downturn, as expected by many forecasters. CEO David Solomon will likely face questions from directors about the consumer business at a board meeting later this week, according to people with knowledge of the matter. You would think that they would be qualifying their customers a little better. The weakest American borrowers are starting to miss payments and default on their loans, and that's showing up at a surprising place: Goldman Sachs. While competitors like Bank of America enjoy repayment rates at or near record levels, Goldman's loss rate on credit card loans hit almost 3% in the second quarter. That's the worst among the big U.S. card issuers, well above subprime lenders. The profile of Goldman's card customers actually resembles that of issuers known for their subprime offerings. More than a quarter of Goldman card loans have gone to customers below 660 FICO score. People are losing their jobs, and you had inflation at 40 years high. That will impact the subprime cohort more because they're living paycheck to paycheck. Sensitive time for David Solomon, who you can see here is an avid DJ, spends more time DJing in the Hamptons over the summer than he does actually doing his job. But hey, when you're a billionaire, it doesn't fucking matter. He's under pressure to improve the bank's stock price. Goldman's money-losing consumer operations have drawn headlines and the ire of some investors and insiders. The investment bank began its foray into consumer finance in 2016 to diversify from traditional strengths of Wall Street trading and advisory activities. Leadership turnover, staff departures, missed product deadlines, confusion over branding, and a regulatory probe and mounting losses. Well, maybe Solomon should stop eating MDMA and DJing at parties and focus on the job he has. Goldman's credit card business, anchored by the Apple Card since 2019, has arguably been the company's biggest success yet in terms of gaining retail lending scale. It's the largest contribution to the division's 14 million customers and 16 billion in loan balances, a figure that Goldman would say nearly double to 30 billion by 2024. Woo! Rising losses threaten to mar that picture. Lenders deem bad loans charge-off after customer misses payments for 6 months. Goldman's 3% net charge-off rate is double the 1.47 rate of JP Morgan's card business. Bank of America is at 1.6. Whoa, so Goldman is writing off a lot more than the other banks. Goldman's losses are higher than that of Capital One, and Capital One will give anybody a credit card. 2.2% charge-off rate. Goldman needs to tighten it down a little bit, huh? Goldman needs to tighten it down a little bit. Capital One says 30% of its loans were to customers with FICO scores below 660, a band that contains near-prime and subprime users, that within spitting distance of Goldman's proportion of sub-660 customers, which is 28%. So what's the difference? Consumer business on track to lose 1.2 billion this year? Why are they just getting wrecked in the consumer business? Is this their way to like fight into the industry and kind of get that retail business? It's very interesting that Goldman Sachs would just be getting fucking wrecked on the retail side compared to others that were mentioned there, you know?